This is Justin Pulitzer. This is my weekend review video for Sunday, June 4th, 2017. Good amount of stuff to cover. I'm going to start very briefly with some of the macro issues that we're facing, get into the 10 market keys, some of the stocks and ETFs and stuff that are involved in that kind of biz, talk about the major market indices, talk about some of the major momentum stocks that we all have come to know and love, or love and loathe, or loathe and something. Then I'll take a few requests. I had been messaged a bunch, and I cherry-picked a few that I thought would be the most relevant, sort of the most frequency there. Anyhow, on the macro front, we have the Fed. They've been coming out with some comments. It seems as though they're looking to hike in the next couple of weeks. You'd never know it by the behaviour in the bonds and the utilities, which I'll get to in a moment. So that sort of seems like it might be a done deal. I think that the market is sort of sniffing out some dovish commentary. Usually the Fed, after a hike, tends to back off a bit because just how they roll. They have been on record recently saying that they haven't reached their growth or inflation targets, and they see the risk to inflation and potentially growth being downward. I think the growth actually was upward and the inflation was downward. Sorry, to correct that. So one has to wonder why they're looking to hike so badly. You know, the job quality hasn't been great. If you look at the average hours worked and the wage, it's minorly ticked up. I mean, nothing signaling overheating. You don't have inflation really picking up. There's really very little to no risk of any type of inflationary spike. We've been below their 2% target for so long, and the quality of the jobs have been below their target for so long. So it really just kind of scratching my head to why they need to hike. The answer, of course, is that they're going. What they really should say is that we're not in a crisis period anymore, and while we're not prepared to fully normalize, rates basically shouldn't be zero either. So I would rather them just come out and say that rather than do the dance, but they like to do the dance, so we dance. Have you ever danced with the devil by the pale moonlight, basically, for my Batman fans. Anyway, we also had a terror attack this Saturday night, basically into Sunday in England. My heart goes out to them. One of these kind of low-yield, kind of smaller attacks, not like a 9/11 style. I don't necessarily know if it's going to have much market impact. It may. I mean, sentiment has been maybe a little overly bullish lately, and we're kind of at the lower end of the VIX range, which we'll talk about in a moment. We also had President Trump pulling out of the Paris Accords, which, of course, the market liked because it's growth positive. I think you've had a lot of CEOs and TV personalities come out sort of against the move, but I think that's more ideological and political than actually practical. If you look at the actual accord, the U.S. takes all of the kind of upfront hits to growth with a lot of, which would cost a lot of jobs and cost trillions of dollars over the next 10 to 15 years. And China and India, where the fossil fuel growth, and carbon emissions, all that stuff is really where, and Russia, all that, they don't even start taking any of those cuts for 13 years or so based on my math. And it seems to me that on a non-binding agreement, we could be taking all that pain now, and then in the future they could just say, sorry, we're not doing it, or just not do it, which is sort of my opinion on what's happening. I mean, our European allies have put kind of no money into that green fund, and there has been, they haven't even been paying their NATO dues, for crying out loud. If they're not paying for their own defense, they're going to pay for the Paris Accord. So, I'll tell you, a lot of even people I follow, I'm not really big into the whole climate change arena, but even like James Hansen, who was like the former NASA scientist who's like accredited as being the kind of the father of climate change, said that the Paris Accord was a fake and a fraud. So I'm really not, I think it's just more of a of a political statement here. So that's it. Let's move on to the business at hand, right? So the VIX, low end of range here. I'm curious to see if we undercut the low. I would say the risk is, of course, either sideways to up from here. What would that look like? Maybe there's a throwback to the 50 MA. We can see we had some poor high structure on Friday. Usually that can sometimes lead to a liquidation break. Mondays have tend to be these gap ups, and then the rest of the week kind of like chops or whatever, but we'll see how that plays out. But we are at the low end of the VIX range, so my guess is either sideways or some type of a bounce up. The dollar has been getting the wackaroo. So why has the dollar been so weak, right? It was looking so bullish up here. Well, the answer is very simple. The Macron election basically took the ability of the EU kind of going away off the table. That kind of tail risk, let's call it tail risk, was taken off the table. And the dollar was artificially high as a result of that. We know the Fed isn't exactly coming in guns blazing hawkish. So we had a head and shoulders. You had been making series of lower highs. Could even draw that in if we're curious. So lower highs and lower lows. I do think, however, the dollar, it kind of stabilized here a little prematurely. This has usually led to next leg lowers, but next leg lowers here might be the leg lower to kind of buy the dip for a few reasons. One, we have a channel low, a 61.8 Fibonacci retracement, a spike low, and maybe a little bit lower, a measured move low. I actually think this measured move low could be in play, and I'll tell you why. If you look at, and the measured move, of course, is just the dollar amount from the head to the right shoulder projected lower. Why do I think that? If you look at the dollar ETF, well, of course we don't need the dollar sign for the UUP, but if you look at this head and shoulders and you use the 1.3 high and the 2.2 low, that's a $1.18 range. If you project that lower, that takes you to 24.17. For anyone who's been following me for a while, we know that that's the key support, the low end of the dollar range. That would basically have round-tripped the entire move. I will be a UUP buyer, put seller extraordinaire, maybe risk reversal player. I like long walks on the beach, and anyway. Down here, that area to me would be an area of interest. You also have a channel low coming down. This might, take a while to get there, but this area to me seems like the area that I would be a buyer. So that being said, we are seeing potentially more weakness in the dollar. That would augur well for the precious metals. I see a long-term downtrend up near this reference high. That to me seems like a reasonable target. I'd be a BTD buyer, meaning a buy the dips buyer, anywhere between, or I'd probably do it via put sales at this point, somewhere between the 50 and 200 MA, but I do think that old high might be targeted. Silver, I had been swinging it long, pretty much off the lows. And now we're getting close to the 200 MA. That was the key supports. Here also, when the real breakdown took place, you could see we broke below it, the failed retest, and then, so this is a throwback and a 61.8. This area to me seems like a as good of any area to book some profits into. If this is going to take off, maybe we get back up to the 17s. This could just be a very big lateral range. 17s would be an area to probably really book if you're a longer dated silver bug. I like the idea that we have higher lows. I like the idea that we're making some higher highs here. I have been booking some profits, truth be told. I did a little into the 50 MA. We did get a decent pullback, but now we're kind of back up at it. So this is where I'll be looking to kind of unload more. I tend to sell in stages. It doesn't always tend to be at once. I tend to raise stops and this such. My real full stop here was going to be if we couldn't hold the 20 MA. That would be basically a retest of the back line, the old downtrend line, which is sort of, in my mind, an unofficial regression line. That would have been my stop on the balance. But I do think that this could potentially have a little bit more up, but I do like the idea of booking some profits. The Bitcoin, this is that ETF. It trades at a very large premium to the actual coinage, but this area to me, 375, we had a kind of a look below and fail. We're back up. I think this is really just going to consolidate its gains for a while in range. I think on any larger correction, and we do get them, there was some back here, you can see. I think it's a kind of buy the dip situation. Short term, I've been having a lot of friends who really aren't in the securities industry and probably very retail-like messaging me and asking me about things like Bitcoin, Ethereum. Some of them are even asking me about like the way, I don't really want to mention them because I don't want to get people excited about plays, but like Ripple and Litecoin, and there are some far ones way out, and the sort of the multi-derivatives of these. I stick to the two biggies, the Bitcoin and the Ethereum. Those are the one, and maybe I would entertain a Litecoin play, but that's really as far down in the food chain as I want to get. But as long as we hold 370, I think this is kind of in range. You have a 10-day MA quickly catching up, a 20 MA catching up. I probably think that those MAs, particularly the 10, maybe the 20, would be playable on a move down for a row trade. The aforementioned bonds. So we're getting into some area that should, quote unquote, be resistance. This is the range I'm using. So when I reference range, you know what I'm kind of talking about. You could also use this range, but 129.79 is sort of the max move. That would be the gap fill. Anything above the 200 MA and this breakout over 124.98 to me is bullish. Look at this. We had a look below and fail here. See, we rallied up to the top of the range, backed off a bit, higher low, and now making a higher high. So with the Fed getting ready to hike rates, bonds might be calling a big game of bullshit on the Fed. Downtrend line is coming up. I expect this area could be some, and the gap high, kind of like, or the gap low, whatever you want to, the start of the gap to me seems like this area is going to probably be some resistance short term, but it seems like we may want to fill that gap in. As long as, if you're right or right out here, you can use Friday's low, 125.05, basically 125 strike, keep it simple, stupid, as a stop. But this doesn't really start getting too bearish to me for a few reasons. One is all the major indice averages are now back bending upward, except the 200, but we are above the 200. So if you want to be right or right out, you could use the quick right out here, the 125 and the 200 MA basically as your stop. Below there, maybe there's some fallback, but it seems like this isn't going to fall apart anytime soon. I think that the bond proxies, the utilities, are sniffing that out. Now, I want to point something out. We did negate fully this head and shoulders, and we are making new highs. But on a longer term time horizon, I didn't even go back far enough, 20 years, look at this channel that we're in. We have spent some time above it. That is true. But it has been a channel, and I do think that we are going to have some resistance. Yes, there could be some move up, but I do think that there could be some back off in this, and I would be looking on pops, given the fact that the Fed is going to be hiking rates, to probably look to start peeling that off kind of soonish. I think I did a measured move in here, and it was just like a little bit higher, so maybe 55s. If you want to be a quickie, I think you could even use Friday's low, because this technically is a look above and fail on the channel. Below 54.12 is a stop, or maybe even a right or right out short play for a pullback to like the 10, maybe even the 20 MA. This breakout here was 52.23. 50 MA will probably be there when it got there, so you could probably structure some type of a put spread or ratio or some kind of risk reversal put ratio as a play for that. No credit risk, in my view, anytime soon. We're just hanging out up at the highs in HYG. You really need to see some type of downtrend. It's interesting that oil's weakening and HYG is still hanging out up here. Tells me that there's very little risk of bankruptcies and there's been a lot of hedging at this point. Speaking of oil, a funny thing happened on the way to the oil charts here. One is that we could be forming maybe an inverse head and shoulders here. I can't really quite make that call yet, but I can say this. We got the 61.8 of the range. We had a very large hammer here. And a lot of people are bearish on oil. I've said for a while that we need to be above 49.61, 49.33, that area to be bullish, basically above the 200 MA. But I could see a RORO trade here if for some reason we were above 48.19. I would say that the 61.8 here held, basically these range lows held, and you have potentially a higher low. And this could disappoint and throw back quickly to the 49s. So keep an eye on that. Oil stocks have not been looking fantastic. And I've said for a while that you really need to see them. They tend to be the leaders ahead of the commodity. So what am I thinking about with oil stocks? XLE has been we had the death cross. Anything below 50 MA to me is still really iffy. But we could be coming into some big levels. You have a range low here at 63.5. You have the 50% fib basically right there. And a gap fill on a 61.8 down in the 61s. So if we do come down into here, particularly, I would like to say early this week, I might be an out-of-the-money put seller. Just because we've now come down a lot. And this is a range low, I'd probably be looking to sell like 60 strike or 61 strike or below out of the money puts on a move here. And then if we actually got here, maybe add to the position a little bit. I would do it really small here and then maybe add down here because I do think that this area is going to be a very big point of contention. ExxonMobil finally starting to make some lower lows, which isn't very good, but again, a couple of important things to note. One is a channel low here, which we have not had a full retest of in a while. You have a 61.8 here and a measured move. I like when the odds are in my favor, and I remember on these moves up, I was talking about rolling down and out and booking some profits. Now down here, I will be looking to kind of add back, particularly if this gets very steep with multiple days down. I love when that happens. When we get into supports after being in very oversold conditions. If we were just to hang out here and kind of meander and bounce and then go, I wouldn't be as keen on this area. But if multiple days down, the steeper we get, the better. People, that usually tends to freak people out. Not me. I like to be involved in those type of moves. So I am looking to add to Exxon or play X. Really, I have some very small short puts in this point, well below these strikes. I think actually at these strikes, now that I think about it. But I would be, I do think that it could go lower, but that move is the one I think to maybe kind of try to buy the dip in. Chevron is weak. Anything below 103.82 is weak to me and could have the range low of 97.53 and the trend line in play. So I like put spreads or put ratios to play for that move. Again, we'd either have to be above the 50 MA for a long or down into this level. And you could buy puts and sell 2 times out of the money. There's a lot of ways to do it. But this area, 97s to me, I would be an interested put seller or maybe even write out share buyer. So that was let's take a look at China. Looking good. However, we're kind of bumping our heads right up around the major breakdown area and the failed move back. So this could be an area of, maybe some profit taking. I do think that this could be buyable on dips, like to the 50 MA, but maybe we want to get all the way even up to the 61.8. You can see that that was sort of the end of the volume distribution here. You have one volume distribution ending here, but really the end of it is here. So this would sort of be my max move. So yeah, I do think China is looking better with the higher lows and now some higher highs. And I think that there could be some buy the dip action. There was some movement below. This tends to trade very choppily. So I do like the idea of maybe booking some profits here and not chasing, but I do like buying the dips. Anything down by 200 MAs to me is buying dips. BABA looks okay. We got close to the channel high. We're on the 61.8, which is where I had said to book some profits, but the back off has been kind of mild. I think as long as you hold this reference low in the 20 MA, it's okay. I guess you could use below 21.95 as a stop. That would probably take you down to the 50 MA, where again, I'd be interested in a row trade. What was interesting to me was we got the move. The earnings were a gap down, but they bought it right up. You have a little bit of topping action here. I wanted my trend line drawer here. Let's draw that bad boy in. So I guess you could say you need to see the trend line break for the move still higher. That would maybe take you up to the 2 times range at the 133s. Like the more this goes sideways, maybe then you get the move. But we have seen these moves before where they kind of spend some time at the top and then lead to larger corrections. I am not back in this at all yet, but if you are currently in it, I think, like I said, you can use that 20 MA as your stop. BIDU. Acting a little odd. I thought this might be stronger by now. You had these 2 times highs. You had this kind of hold mid-range and now back up here. So you've had multiple tests above this area, but it hasn't really stuck just yet. I guess you could use this 184.32 as a stop. If that were to fail, maybe we would come back down into this moving averages, where I'd probably be looking to sell some maybe near-dated out of the money puts. But BIDU seems like it wants higher, but I don't know. It's just not making it easy. It's not really cooperating so well. They're probably easier money. IBB got the bounce off the 200 MA that we had discussed about in prior video. Now we're almost back up to the channel high. As long as this holds 50 MA now, I'm cool staying long. Below, I would be out. This seems like it's trying to go up. I don't love that it's making lower highs and a little bit lower lows here. You really need to see this pattern break and get that final move up. I do think eventually this will resolve higher, but I don't know that it won't be choppy first. The big one that I also don't talk a lot about, though, which was interesting to me, was this Biogen. This had a look below and fail and a move up. So I think if you're long this, or if you want to play long this, you could do this with 20 MA as a stop. Probably first target is a 50 MA and maybe even the downtrend line. Transports. Now, this is something to discuss. Keep your eye on this. This could be seen as sort of like a double shoulder, so I'm not ruling out that this would be one. But I will say this. It's not a very good argument for the shorts and the bears for IYT to have basically taken out the downtrend line and now make with basically a 200 MA hold and now being above the potential right shoulder. It's stretched, the move is high, but I would say any pullback and hold of the 100 MA is okay for a right or right out long, and using that as an entry if it fails for a right or right out short. So the 100 MA now is going to be the key in IYT. Airlines have been keeping that thing doing well, so it's good for tourism, I guess. Another reason I don't think we have an all-time recession busting out here, although we are struggling at the 50 MA. You really need to see this clear the 50 and 100 MA for that move back up, but Dr. Copper isn't exactly fully rolling over, and as long as you hold this like 2-4-2-6, it's still in bull flag kind of patternish moves. XLF, this is a little bit of a fly in the ointment, and I have been very leery of this for a while now, and I'll show you why. One is that the ETF is still below the 50 MA. You've had two basically, look at this though, you've had 3 higher lows and 2 equal highs. So I think you could be right or right out long above the 50 MA, and that would fill up to 24s rather quickly. Below the 2-day low, like 23.22, I think you have a right or right out short to 22.85 and potentially a further breakdown. I've said for a while that the keys to the kingdom here were to take out, like IYT sort of did, these sort of double tops and the right shoulder. If that were to happen, I think it's go time back to the upside, because this would have been a failed bearish pattern. But if you start losing this, this could get ugly quick for a move down to the primary trend line in the 61.8. One of the things that has me thinking that is the relative weakness in JP Morgan. Look at this. You're already below the trend, the channel, and you're kind of just sucking wind here. Although I will say this, again, the 50 MA is now bent backwards, but for a potential right or right out trade, you have basically a range, a true range low here, the old up channel, and the 2 times move down at 77.88. I mean, a complete gap fill here and a 61.8, I mean, maybe, but at that point, I think the market would be pretty much in shambles and you'd know it. So any move down into this area, the 77s, for a right or right out play, I'd be looking to sell maybe same week or next week out of the money puts. I do like the idea on a bounce here to buy like some kind of put spread or put ratio for that move down to there. So that's my thoughts on JPM. Goldman Sachs also looking rather not good. You have basically a descending flat triangle here. Let me redraw this as a channel. You have a range low. So this is kind of bearish, but not overly out of control bearish. You're still within the channel. And you have basically a hold here of the 200 MA. I guess if you want to initiate a short below 209.62, maybe for a move to the 50% fib. I mean, look where the 61.8 though is. That would be a breach of channel and really a retracement of the entire kind of parabolic, I wouldn't say parabolic, but the big up move. So I would be interested in like some longer dated put spreads or put ratios for maybe for a move down there, particularly if we were to lose the 200 MA and this reference low in channel. For me to be long, I'd really need to see this kind of downtrend break. And then maybe you'd fill it up quickly to the 234. But I mean, until this really clears 234.63, there's a lot of, I don't know, technical resistance up in this. One I liked, I mentioned in the last weekend video, was Blackstone. I took the liberty of drawing in a Fibonacci retracement. We're basically at the 50% fib. And I did a 2 times range given from this move, from this range, and then also the pullback range. So any pops up into like 34s, 35s, maybe 36s if we're lucky, I'd be looking to book the profits on this. My stop would be below this kind of trend line now. And if there was some kind of maybe a retest of like 31s, I'd be looking to maybe add back on some of the stuff that may have gotten stopped out. Or if you missed this entire move, it would basically just be look, you had the professional gap and go. This would be the check back, just so you know, to like the breakout point, and it would still be bullish. So I would be an interested buyer again, or maybe even out of the money put seller somewhere with the confluence of the wherever the 50-100 MA as the lower strike. So Blackstone looks like it has a little bit more to go. The upside might be limited, but I do like it for buy the dips. The S&P 500 SPY. What the hell is going on here? Moving right along. All right, so a couple of things to note. One is that we had this look above and fail, pull back to a higher low, and now we're making a newer high, a high. And look, you basically didn't even, you kind of broke out, had a few days of a stutter step, and now going. So I am a little concerned that we're above this sort of like channel. But as long as this is getting, I mean, it's not overly extended. If there's any kind of pullback into this area, the real key is going to be this 240.32. But if I did some upside projections, 245.70 is the kind of the 1.618 fib extension of the consolidation range, and then 2 times range is up at 249s. So there could be some more move, like if we were to start getting steep. If you're looking to kind of short, up here like 249, 250 to me would be a good area to sell out of the money calls into. I think that it would start getting unsustainably steep at that point, and you could start legging into a short that way. But SPY isn't looking really too cray-cray to me. The expected move this week is $2.13, so 246.30. Or down to 242.04, of course, with downside potential being more likely. I tend to use, when you're in the low IV, the upward bound is the kind of the risk to the upside being true, and then to the downside it could always be more. IWM. All right, so this was looking better Thursday, I had mentioned, but Friday, look at this. We kind of stalled at some reference highs. I don't know if this is going to wind up being a head and shoulders, but we did break the triangle here to the upside. I don't love how this closed. It kind of closed a little bit iffy, weak. But as long as we're kind of above this, I guess this Friday low, 139.05, it's like okay. If this sort of like, let's say Monday or Sunday night, futures haven't opened yet. They'll probably open while we're still broadcasting so we can check. But this area to me, if it like sort of meanders up, it's okay. But if you start losing here, there could be some kind of a pullback back down. Maybe, you see, this tends to be very choppy, right? These small caps have been very, very choppy. So I think that this is looking better, but it just looks a little suspicious to me that we can't clear the 140.86. I really would like to see that for this thing to kind of firm up, and I do like it if there is some kind of a larger pullback at a 50 MA row, or if you're playing short, that would be the point to cover. Expected move this week is $2.08, so 141.93, or down to 137.77. Qs. So this is getting a little stretched. We stutter stepped at the 1.618 fib extension. Why don't I have a 2 times range in there? That's a little wild. Let's add in a curve. $2. So we're almost at it. 144.04, and we're kind of getting above the channel high here. So we may have some stallage in the NASDAQ, and I hate how this is drawing. We may have some issues coming up in the NASDAQ. Of course, this could always just go full on cray-cray, but I do like the idea of maybe booking some profits up here. That's going to depend a little bit on Apple. Oh, the expected move in Qs is $1.75, so 145.21, or down to 141.71. So 145s is probably a good spot if you're looking for the row shout. A couple of things about Apple. Apple is looking kind of bullish again. I will say this. This isn't above the channel, and the channel high is right at the old high. So that could be a double top here. But as long as this holds a 20 MA, I'm cool being long. A loss, like let's say Tuesday. Excuse me. Oh, man, I have to sneeze, but anyway, I was anticipating it too much. I like this kind of pattern. As long as you're above 154.57, it's okay. As long as 155s hold, I think this could want to see 162, so maybe that is kind of like the blow-off in NASDAQ. But I think that this will see the 156.65, and if you're, want to be row, you could try it as short. with a very, very tight leash. But if you start getting above this, I'm going to start targeting the 162s. So I have a little long on in Apple. I would use Friday's low as a stop. I'm short some puts, which are doing okay. Amazon. All right, so let's not BS each other. A little Sandy Lyle for you. If you know the movie in that, you definitely get some brownie points from me. Along came Polly, of course. All right, Amazon has an up channel, has a secondary trend line, and now has a kind of tertiary trend line here. Above the 965, that was the earnings gap high. I said I was bullish. We got the 1,000. We got a 2 times range move. Maybe this has a little bit more up to the channel high in 1037s, 1036s, 1037s. I'll tell you what's crazy about this is you could pull back even to retest the 965 breakout, and this thing would still be really bullish. Like, it's pretty impressive. If you're looking for a right or right out short, though, like if below Friday's low, 995.67 would be an entry to me, and below 982.16 would be another entry for the pullback and start covering at 965. I'm kind of hoping that there's some kind of a larger pullback in this to the 50 MA, because that, to me, any touch of the 50 MA, look how significant the 50 MA has been here. I think any test of the 50 MA would be a right or right out buy. I'm impressed that this didn't pin 1,000 on Friday. It actually did get the breakout, so maybe there's a little bit more up in this. But it's also possible that there is some market makers trapped in that because of that, and maybe there is the wash down Monday for the move to 1,000. But it seems like this may have a little bit more up to go to the uptrend, and I've discussed stops and potential shorts as well there. So let's keep it simple like that. Facebook looking a little bit more bullish. I actually had some pretty good timing on this. I sold some puts here on Thursday near the low, and honestly didn't do a ton because it did have the double top and the back off, and the FANG stocks looked a little weak here, but was rewarded very nicely on Friday with a new all-time high. And remember in last weekend's video, I said I thought Facebook was looking bullish again. The back off was mild, and now we have a new all-time high, so it's hard to be too bearish on Facebook. 556s, 557s could be, 156s, 157s could be interesting. This is one of the progression lines, the kind of the max progression line is up there. This, I guess could be a look above and fail, but considering it closed on the dead high, it seems to me like it might want to go higher, and I wouldn't get really bearish on this until you lose the 20 MA, but Facebook looks all right to me. Netflix, I've been bullish, but I've been cautious because I think the upside here might be a little limited. We have measured moves and 1.618s on different time frames close, so we could have more of a push up in Netflix. Look, all-time high again, but I kind of stick to my guns, and look, if we want to do a 2 times range, I will show you what that is for those of you who have an insatiable Netflix thirst. It's high. It's a lot. It's 186s. So it's possible. Maybe we do get up there, but I do like the idea of booking, at the very least, booking some profits and raising stops into the 66s and 68s. Google, hard to say you have good trade location trading on the other side of the channel. We got the 2 times move. We're way up there. I will say this. You have a kind of an interesting range here, 999.60. So, and you have the low of the day of 981.68. So if you want to write a right out short below 981.68, I think would peel back to test the backside of the old channel around the 956s. So that would be an interesting right or right out short for me. But these all seem like they want to make 1,000 and maybe a little bit beyond, sort of Buzz Lightyear to infinity and beyond. Moves below the 50 MA have been unsustainable, so any pullback into that area. Look also, this was the old progression line in Google, and look where the 50 MA is. This progression line, there will be at some point a pullback in Google, and I will be there to buy the dip for at least a day trade on this progression line because I do think that it will be an interesting buy. It's hard to say you have good trade location here for Google, but it's still in buy the dips mode, and the first pullback I think of that channel will be a row long and definitely an area to cover short. Elon Musk. I'm a big fan of Tesla, and I like Elon Musk, but I don't like that he's kind of putting his political view, although I guess you kind of have to because he is an electric car maker and an alternative energy guy. He dropped off the president's councils when President Trump pulled out of the Accord. You have a 3-day range here that's equal. Right or right out short, in my view, below 335.16 for that pullback to the breakout of 325s. But that to me would be a check back. Well, it wasn't really 325s. It was 327s. But anywhere in that area, 10 and 20 MA, that to me would be a right or right out place. First of all, a place to cover and a place to maybe right or right out long. I don't think that the short squeeze in this is quite over just yet, but we may get a little bit of rollback here. We had the breakout, maybe there's a retest and then a move higher. The channel high is just a little bit higher, so I've been playing Tesla long, but like the idea of booking some profits and then kind of trying it again on the pullback. NVIDIA got the 2 times range basically to the tick, pulling back. If you want to use a stop, 142.05 seems as good of a place as any to me. If you want to give it a little more room, maybe the 10 MA. If you lose the 10 MA, I think we see a 20 MA and a little gap fill pullback. One of the things that had me a little concerned with NVIDIA in general is the semiconductor index. I've drawn in a channel, and we're getting close to the channel high. So I like the idea of booking some profitos in some semis, and that goes across the board, like the microns and all that stuff. In the interest of saving time, I will not go into micron, and I'm surprised, actually, at how fast we're flying through this. By the time we're done with this video, we will have covered a lot of ground. Price line held the 50 MA. I thought that this could be a potential breakdown. It was a little mini look below and fail. Gap is filling. Hard to say of great trade location. I do think that this could push up a little higher, but you do have channel high in play. I like buybacks on the 50 MA. Just let's see how it takes it. Let's see how it takes the gap fill. If there's people who want to book profits there, it seems like it's going to go a bit higher, but I'm a little leery. One of my favorite plays, if you've followed me for a while, is PayPal. I've said that I thought that this was the potential for a big move up and a potential buyout candidate. We are way getting expensive in this breakout, though. I want to just draw a 2 times range in on this one. Oh, we do have it. Of course we have it. We're above the channel. This has been a gap and go for the most part. I talked about booking some profits at the channel high. It's going on a bigger time horizon. 55s are the 2 times range of the bigger range. Like we had this kind of range. We got that. Now we have the 55s, I think, is the place to book more profits. Any rollback to the trend, and like you could see this trend and the old up channel, I think is a row buy for a bounce, at least for a day trade. At that point, we would have the opportunity to maybe even bounce to a lower high, and then, we would know. Any drastic pullbacks to 50 MAs on like big market corrections, flash crashes, any of that good stuff that we've come to know and love, I am a buyer. I still think that this could go maybe even a lot higher. I don't even want to get people too cray with doubling, but it's extended now, and I'm looking to book profits in any pops. I have on my, this is like on from the IPO, by the way, high for the 2 times move. So the re-IPO. So stuff I've been getting by request. Deckers Outdoor. I was asked after hours what I thought about this. I thought as long as we cleared 62s, we would go up to 69s. It's up a lot. Probably a good idea to maybe book some profits in this. I do think this could go higher to the primary downtrend line, but I would be a dip buyer. Like if there's some kind of a little rollover, maybe back into this range. I do think higher, but I do think that it needs a little consolidation time and maybe a little pullback. So longer term, probably higher. Shorter term, maybe a little consolidation. The Lululemon didn't get to the downtrend line. The last stall was at the 50 MA, and this was the old support. And you can see once we kind of got below it, it was problems. It should be a support now. You have a range low at 54s. So anywhere between 54s and 50 MA, let's just keep it simple. I like buying it for right or right out against the 50 MA. If it can hold, great. If not, we're out, and we have good trade location. Restoration Hardware. I had been bullish on this very low, got out a little early, but now we are back basically testing the beginning of the gap. So it's either a long above the high of day for a move probably to the 50 MA, or if I had my druthers at the gap fill at the 61.8 fib down at 37.98. At that point, I would either be looking to sell at the money puts or maybe even out of the money puts at like 34 strikes. Ideally, you'll see like a few more days down into there, and that would be the spot. Bingo, in my view. Shopify, not one I talk about or cover very often, but this thing is a monster. It's doing the monster mash. All right, we're still in auto, so that's okay. Making new highs. So if you put some fib projections, look where the megaphone channel high is, up right at the 1.618. So this could maybe see 105s. That's sort of where I think we might be going. Anything above 95.88, I think you could stay long. Back below there, it might be a bit of a look above and fail, and it could come down to like the 10-20 MA confluence. But this, to me, as long as you're above this big candle's high, this 92.98, I'd rather be long than short. And 105s could be in the offing. BlackBerry, not one I cover very often, but you're getting close to range highs. They have earnings coming up. This has moved a hell of a lot off the lows. This could be Restoration Hardware 2.0. Look where the 61.8 would be at the beginning of the gap. The 78.6 is much lower. This bar here is the key. Above 1174 is bullish. Below 1065 is less bullish. You have a trend line in there holding 10 MA. If you lose the 10, you probably see the 20, which is right on the trend line. If you lose that, and it would probably happen in gap fashion, we would be kissing the fibs. The 50% fib seems interesting to me since that is the 50 MA and the start of the gap. If you're long, I would be booking profits. If you want to try short, be my guest. YELP. YELP. YELP, YELP, YELP. Double top. Oddly, look where this was too, the breakdown point. I mean, the old breakdown point. Now we have broken some uptrends and we are into some Fibonacci retracement levels. Now, longer term, I actually like Yelp. I think that it's a real business that is going to be very hard to, I think it gets bought, quite frankly. You're kind of right into the gap here. You could use Thursday's range as a key, long above 29, short below 27.80. I would actually like for this to come down more and get the full 1.618, maybe even the gap fill down in the 21s. But I don't hate selling out of the money puts at 25 strikes and below. I think those will, you may take some heat at some point, but I think will be kind of okay. If you're looking for a rally point to short, the breakdown point and the 50 MA would be as good as any. Not one I don't think I've ever talked about. Maybe I have. Ferrari. This has been an interesting move. You are at the 2 times range, which is always my target for IPO highs. So any further strength in Ferrari, maybe this wants to print a hundo, but I would be booking profits. 50 MA seems to have been the support. So if you want to play some, I don't know, put ratios or stuff. I think you could play for a move down to there. That's sort of the beginning of the gap. This could have been a hanging man excess high if you want right or right out short below 89.5. And I'm going to set that alert right now because that will be happening if it breaks there. 89.49 at or below. And last, and we are going to write short. Row. I probably wouldn't have been this dramatic if I wasn't filming, but hey, got to keep it pithy. So anything below there, I'd be interested in a right or right out short for some kind of a rollback, probably to the 20 MA. But yeah, this area to me seems like a good area to book some profits into from here, between here and a hundo max. I am amazed that we finished this video in under an hour. I really thought it was going to take longer. If you're not following me on Twitter, my handle is @JustinPulitzer. If you like this video, please retweet it. That's the best way to say thank you. Leave me some comments and send me some DMs if you have questions. And I will likely, since we have a full week, be doing my midweek video on Wednesday. Maybe Thursday. We'll see how things go. Anyway, have a great rest of your weekend, what's left of it, and cheers.